Now we go for our Zimbabwe market update with Itai Chirume, who is Executive Director of MMC Capital. Good morning, Itai. Perhaps you could just give us an overview of the market before we go into some of the specifics, particularly the mining sector.
Okay. The industrial index in the last week was up 2.83%, largely driven by movements in the heavyweight stocks like Delta, which was up 5.2%. From 136 cents to 143 cents yesterday. This was after releasing a fantastic set of results for the full year ended 31 March 2018. Zim was up 16% in the week, trading from 25 cents to 29 cents. We're also anticipating a good set of numbers again for the full year to 31 March 2018. We also saw National Foods tick up 4%. From 250 cents to 260 cents. These three stocks would be amongst the top three liquid stocks in the market at the moment, and their collective movements would account for the movement in the industrial index. In mining, nothing much happened save for the increase in bids in Rio Zim, which moved up from 47 cents to 50 cents. All the other resource stocks traded pretty much unchanged in the week. As a result, the mining index was 1.61% up from 73.24 points to 74.42 points.
Itai, just looking at that mining sector, the mining chamber has said that proposed tighter state control is going to scare off investors. One would have thought, given the history and the indigenization and the amount of intervention there has already been, that investors would be accustomed to this. So could things get worse for investors?
I think what we're seeing now is probably more clarity. Obviously, the way the indigenization game has played out has been fraught with a few inconsistencies in terms of policy direction. But I think the chamber is calling for more clarity, and I think as we get more clarity in terms of how the government is going to deal with mining deals, if anything, I think that will bring clarity and remove uncertainty. So if anything, I think we're moving towards clarity in the mining sector.
Well, investors do like clarity, of course. Just getting back to Delta, you mentioned the numbers there earlier, but they really are quite remarkable. If you look at the revenue number, so the amount of money coming into the company, up by 14%, but all those other important measures like EBITDA, earnings before interest, tax, etc., up 36%, earnings per share also 36%, the dividend up 63%. It can't sustain that kind of premium to revenue, can it?
Well, I think Delta is in a very good space. It's one of the stocks that enjoys an improvement in consumer spending in Zimbabwe. So I think if you look at the Zimbabwean economy, you take note that the unemployment levels are still pretty high. A lot of activity is happening in the informal sector. Delta controls about 90% of the beverages market. With those demographics, if anything, I think there is still scope for Delta to maintain this kind of numbers. As we go forward, our projections are as income per capita improves and more activity happens in the formal market, those numbers can only increase. Delta has also done formidably well in terms of increasing its capacity. I think its capex budget has been quite generous for the last 4 years. I think they've put in more than $200 million into improving plant operating capacity. So I think they're well poised to sustain these numbers as long as the Zim economy improves going forward.